welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Lagbarago. It's Thursday, the 18th of December. We thank you for joining us at this time on the show.
All right, let's begin with your news now. This Thursday, Marriott International has officially announced the entry of its super luxury edition hotels brand into Africa, with the Cape Town edition part of the 1 billion rand Key 7 hotel development at the iconic V&A waterfront. The project, a collaboration with V&A Waterfront Holdings, jointly owned by Growth Point Properties and the Government Employees Pension Fund, will feature 142 rooms and suites, world-class dining including a signature rooftop bar, a spa, pool, and meeting and event facilities. The development will also include 6 private residences under the Residences at the Cape Town edition, promising a new standard of luxury living. In Angola, the U.S. International Development Finance Corporation, DFC, has signed a $553 million loan with a consortium of firms for the refurbishment of Angola's Lobito Railway, part of the strategic Lobito Minerals Transport Corridor. The project, connecting copper and cobalt mines to the Atlantic coast, is a key element of Washington's push to secure access to strategic metals and counter Chinese influence in Africa. The financing will support the Lobito Atlantic Railway, a consortium including Portugal's Motor Angel Commodities firm Transfigura and rail operator Vecturis SA. The Development Bank of Southern Africa will provide an additional $200 million. In Nigeria, a historic milestone for Nigeria's innovative economy has been marked with the presentation of the National Intellectual Property Policy and Strategy, Nigeria's first unified framework to protect, commercialize, and scale creative ideas. The NIPPS aims to position Nigeria as a regional hub for intellectual property and innovation in West and Central Africa, aligning IP development with trade, digital growth, and the AFCFTA agenda. Here are excerpts.
So first of all, taking a step back, what is the Federal Ministry of Industry, Trade and Investment? Our mandate features exactly what you've described under item number 7 of the Renewed Hope Agenda, which is not just a document. This is basically my KPI for FMITI, and it's to accelerate non-oil diversification, working with the ministries that you have working on this area. And when you look at the Nigerian economy, the structure of the GDP, over 50% of our GDP is now in services. The creative sector, including tourism, including science and tech, just a huge demographic of services and value addition and digital trade. So when we look at, and also industrialization, light manufacturing, like with the garments, cotton and textile. So when we look at our mandate and what we have been delivering, not what we hope to do, what we've been delivering, which is we have the data for it. We prioritized a number of things since last November. We prioritized operationalizing the African Continental Free Trade Area and what that means for small and medium-sized enterprises. So for example, I can tell you that being digital trade champions for AFCFTA, what that means as well, opening an air cargo corridor earlier this year, being the first to have the 5-year review of AFCFTA implementation, being the first to, I don't want to be like we're showing up, but
no, please, let's show off.
We've had a busy year. And so just being the first to ratify the Digital Trade Protocol in Africa, we took that agreement as a live example of where Nigerian businesses are competitive. And we mapped, for instance, with our air cargo corridor, 13 Eastern and Southern African countries, and we supported, and the businesses that partnered with Uganda Airlines and UNDP supported us on that as well, a situation where those businesses had a savings of 50 to 75% on air freight costs. And so these are practical things that we did for businesses.
At the Critical Minerals Year in Review, officials have underscored a major shift in how the United States and its partners approach minerals security. Speakers stressed that in 2025, minerals security has become central to both national and economic security, with Washington moving from rhetoric to action through new policy tools and a stronger foreign policy focus as attention turns to 2026. Let's listen.
A lot of things are actually working really well. Okay, so if I think about 2025 as a year, we've had a record year of equity issuance. We've had a record year for debt issuance. We're driving projects forward. The level of vigor and interest is very high. The challenges, and so I'll give you, in areas like antimony, tungsten, to some extent rare earths, where prices have moved, we've been able to mobilize markets and crowd in private capital. And that has been really, really effective. The markets that are still lagging are the ones where prices have not yet moved, and we have a near-term oversupply. Now, in the medium term, that should work itself out because we're going to continue to demand more things, and the economy is going to keep growing, and we're going to build more EVs and get into robotics and do battery storage, and AI data centers are going to use a lot of energy and require battery backups, et cetera. So all of that's going to work itself out. But in the very near term, in markets like lithium, some parts of rare earths, graphite, nickel, we have near-term oversupply. And that's creating a near-term price signal that is very difficult for investors to overcome. And we have seen an avalanche of interest, I called it, but it's reacting to a huge number of policy initiatives that the federal government here and governments around the world are implementing to attack this.
Meanwhile, Botswana Development Corporation, BDC, has approved a 7-year term loan facility of $10 million to Letshego Africa Holdings Limited, a Pan-African retail financial services group headquartered in Botswana and listed on the Botswana Stock Exchange. The transaction represents a key step in BDC's impact investment strategy, deploying catalytic capital to support programmatic lending in social sectors such as affordable housing, education, healthcare, and micro and small enterprise financing. In other news, Ethiopia had $54 million in airline funds blocked from repatriation as of October 2025, up from $43 million in October 2024, according to the International Air Transport Association, or IATA. The increase comes after the country recorded one of the largest reductions in blocked funds in 2024, when holdings fell from $149 million in April to $43 million in October, following the floating of the BRICS, supported by inflows from the World Bank, IMF, and other multilateral institutions. Finally, on news now, the Kenya Economic Report 2025 has been officially launched, providing a comprehensive assessment of the country's economic performance and outlook. The report highlights key macroeconomic trends, policy priorities, and strategies to support sustainable growth and economic resilience. Here are excerpts.
A key element of today's launch is to highlight the KAR 2025 policy options for decent job creation and to showcase their relevance to strategic tools for national planning, productivity enhancement, and inclusive development. Now, the KAR has a theme, creating decent jobs for prosperity, and it reinforces the government's commitment to ensuring that economic growth translates into meaningful employment. And by examining sectoral dynamics, the launch aims to spur dialogue and policy action on expanding decent job opportunities. Now, this event also underscores the importance of collaborative and data-driven policymaking, and the KFIA report, the Fiscal Incidence Analysis Report, jointly produced by KIPRA, Kenya National Bureau of Statistics, University of Nairobi, UNICEF, and World Bank, exemplifies the power of partnerships in generating robust evidence for targeted fiscal policy reforms. Now, the KFIA report aims to deepen understanding of how taxes and government social spending affects poverty, inequality, and welfare, especially among women, children, rural households, and those in arid and semi-arid areas. And the findings are expected to support the design of equitable, efficient, and well-targeted fiscal policies that advance social protection and economic.
I am Melissa Enoch, and that's it on News Now this Thursday. The show returns shortly with Grace at the archives room, giving us our market round. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there, Grace.
Hi, Melissa. Let's take a look at how the markets traded today, starting off with the equities. The Nigeria All-Share Index advanced today by 0.35%. The BROVM inched down 0.02%. The Nairobi Securities Exchange jumped 1.70% to 183.84. In South Africa, the Johannesburg Stock Exchange added 0.09%, and in North Africa, EGX 30 fell sharply by 1.39%, while Morocco's MASI advanced 0.24%. Let's do a quick round on some of the Pan-African currencies. The rand weakened 0.40% to 16.77 against the US dollar. The Egyptian pound inched up 0.03%, while the CFA franc strengthened 0.09% to 559.98. The Kenyan shilling slipped 0.02%. The Moroccan dirham firmed 0.09%, while the naira gained 0.37% to 1,458 naira 17 kobo. Let's now switch to the commodities data deck, beginning with energy prices. Brent crude rose 0.18% to $59.79, while US WTI gained 0.29% to $56.10. Natural gas surged 3.38% to $4.16, and RBOB gasoline gained 0.24% to $1.69 as at 13:04 GMT. Now, finally, two metals prices. Gold is 0.48%, while copper slipped 0.62% to $5.40. Platinum gained 0.73%, aluminium dipped 0.22%, and iron ore rose 0.24% to $106.61 as at 13:05 GMT. And that's our Money Moves market today. Back to you, Melissa.
First, thank you very much for those updates on how the markets wrapped up today. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.